Hey, looks like I'm live. All right, let me make sure I'm connected over here on this end too. Okay, perfect. All right, what's up, guys? If you're here, if you jump in late, welcome. I've got something very interesting for you guys. I'm going to be actually presenting to you a complete curriculum. So I'm going to be doing this for free because a lot of people don't have access to some of the, the funds that it requires to purchase a course from somebody or to, consume some of those materials other than from being online. Oh, Jesus. I'm going to have to get my charger connected here. Give me one sec. All right, well, that's going to have to do. Okay, so we got something very interesting for you guys. I'm not sure where I left off, but like I was saying, I know a lot of people don't have access to money because if you want to start this cryptocurrency journey, more than likely you have a full-time job. You're not able to pursue trading full-time. So you don't really have the funds to gamble on an educational course. So let me start off by saying that we do offer educational courses at Crypto University. You can go there through the link in my bio at any time and check out our courses. But like I said, if you don't have the money, just stay tuned because I'm going to be doing a 7-step live process. So I'm going to be going through a lot of the stuff that, it takes to become a cryptocurrency trader. I'm going to start off by saying I'm not going to shove anything down your throat. You don't have to use what I use, but through this process, I'm going to tell you what I do use and what works for me whenever I'm doing cryptocurrency trading. So I'm not saying go out and use the products that I use and get the products I use. I'm just saying I'm going to be talking about what I'm using, and if you want to check it out, you're more than welcome to. So we're going to be going through today. We're going to be introducing you to cryptocurrency. I'm going to be looking at my iPad here. I've got a script to read from for you guys. So like I said, this is going to be a 7-step educational curriculum course. So Chapter 1, we're going to be, like I said, introducing you to cryptocurrency. Chapter 2, we're going to be discussing exchanges. And I'm going to be telling you about Binance because that's what I use. And I'm going to tell you about 3 commas because that's what I use. And then in Chapter 3, we're going to be talking about technical analysis. This is going to be the sauciest part. Everyone's going to want to tune into the technical analysis section, right? Everyone needs to know TA so that way you can become a master cryptocurrency trader, a professional cryptocurrency trader, and that way you can live off your cryptocurrency trades. So in Chapter 4, we're going to be talking about trading strategies. We're going to take that technical analysis that we learned in Chapter 3 and we're going to apply it to trading strategies and learn how we can actually develop strategies with the tactics that we just learned in the previous lesson. Then we're going to talk about position sizing and risk management, right? Because now that you know technical analysis, now that you know some trading strategies, you need to learn how to manage your risk. And you need to know how to portion your trades so that way you don't overexpose yourself in any market and things like that. That's going to be Chapter 5. And then in Chapter 6, we're going to be talking about the trading psychology. So a lot of people miss this aspect. A lot of people miss the trading psychology because they do, I'm a technical analysis master, blah, blah, blah. But they don't talk about the emotional part of it. You have to know how to manage your emotions whenever you're trading. A lot of people talk about FOMO, which is fear of missing out. A lot of people talk about FUD, which is fear, uncertainty, and doubt. So a lot of times influencers try to influence you to buy or sell coins to accomplish their agenda. And you need to learn the difference between pump and dumps and actual, price trends, things like that, and how to manage your emotions so you don't go out there and feel euphoric after a string of wins. Then you go out and overexpose yourself, or if you lose a lot consistently, then you might want to go and try like revenge trade, which could, make you experience more losses. So we're going to be talking about that in Chapter 6 because I think it's pretty important. And then finally in Chapter 7, we're just going to have some final words. Everyone who's been, hopefully had joined along the way, we're going to be doing a live Q&A. I'm going to try and get some of you guys up here, and anything that you might have had questions about that you didn't get answered because you missed the live opportunity, you'll be able to catch up on. And so I'm going to be uploading this to YouTube as well once I'm done here. as well as my IGTV, so you can always check it out in case you did miss the live. You don't have to sit through it all. So I'm gonna go ahead and start reading to you guys now from my little script. First and foremost, I want to say that any advice or information in this guide is just for educational purposes. You know, yada yada yada. Don't trade based solely off what you find from, you know, the information I'm going to present to you. You always need to do your own research. You always need to check more than just one consideration. So basically what I'm saying is, you know, trade at your own risk. You know, every investment is a risk. You need to understand that. So moving forward past the disclaimer, just one more time, I'm not responsible for your money. You need to learn how to manage your own money. I'm just going to try and teach you about it. Okay, so introduction to cryptocurrency. I'm going to tell you right now, I'm going to skip over all the back end of blockchain technology. Yes, blockchain technology is great. It's going to change the world, but that doesn't have anything to do with trading. We're going to be talking about how to trade, how to make money. So I'm going to tell you what you need to know to make money from the markets each day. If you want to learn about blockchain, there's plenty of other sources for that. So moving forward, there's numerous reasons why crypto trading can make you more money than something like stock trading or forex trading if you're already doing that. By trading crypto, you can take back control of your money by accessing a market that is decentralized from governments and is also open 24/7. So being open 24 hours a day allows you to trade alongside other responsibilities you may have. Like if you have work, you know, a lot of us work different schedules and the stock market may not be open to meet your needs, or the forex market is closed on the weekends, so you might not be able to trade on those markets. But with crypto, you can trade 24 hours a day, whatever works best for you. So it also does not put restrictions on how many trades you can make a day or a week. Like a lot of stockbrokers will limit your trading. You know, you can only put like 3 buy orders, 3 sell orders, whatever, right? With crypto, as fast as you can press buy and sell, if you have the money to pay for the fees, you can buy and sell 100 times in a minute if you can press the button that fast. So it's great to it's great to trade crypto because there's no limits on it. There's no restrictions on trading crypto. On the flip side of that, it makes it much more volatile. So you can see much greater price movements opposed to the stock market or forex market. And in addition, the crypto market also offers greater leverage than the stock market and forex market, which could potentially amplify your gains if you use it the right way. But like I was briefly saying earlier, if you overexpose yourself or don't manage your risk properly, you know, you could experience liquidation, which means the total loss of all your funds. So let's not do that. So if you're already an experienced trader and you want some of the juice, I don't think you're going to benefit much from today's lesson, as we're just going to be going over the basics, but do stay tuned for following lessons. As I said, we're going to be covering technical analysis in chapter 3. So what is crypto? Basically, a cryptocurrency is a digital currency or virtual currency that is secured by cryptography, right? So it acts as a store or transfer of value from one person to another over space and time, right? And there's many different cryptocurrencies. It's founded on blockchain technology, which is a distributed ledger enforced by a disparate network of computers. And that's from Investopedia, right? So in other words, a cryptocurrency is a way of storing value. And there are many different cryptocurrencies that exist, just as there are many types of fiats, right? And they can be exchanged against each other for higher or lower values. And this is what is known as trading. It can be done on what is called an exchange, and we will talk about that in the next chapter or in the next lesson. So you should always research a crypto coin before trying to trade it, because each cryptocurrency should have what is called a white page or a website or something to tell you about the project specifics and more about the coin. Unfortunately, a lot of cryptos appear each day and then disappear the next, which is what is known as an exit scam. So I wouldn't advise you to invest your coin or your money in any coin you haven't researched to protect yourself against scammers and against, exit scams. So cryptocurrencies are usually held in what's called a wallet and can be transferred to another wallet, and that would be considered a transaction. So if I have a wallet and you have a wallet and I have Bitcoin in my wallet and I want to give you 0.001 Bitcoin, I send it to your wallet address and then you have the 0.001 Bitcoin, and that's considered a transaction. It goes through the blockchain and someone has to verify it. Miners verify that transaction. through the distributed ledger we mentioned earlier, and then you get the money that I sent you, right? So each cryptocurrency has its own wallet and a specific combination of letters and numbers assigned to it, known as a wallet address. Sending the wrong coins to the wrong wallet address can result in total loss of funds. So be sure to check the wallet address for errors before you press send. Make sure you check the wallet address letter by letter, number by number, before you press send. Double check it. Even if you copy and paste. Even if you scan the QR code. Triple check it. Make sure you're not sending your money into cyberspace, okay? That sucks. I lost $500 sending BNB to the wrong address one time. Don't be like me. Learn from me. So, the number one cryptocurrency at the time I write this is Bitcoin. If you don't know that, now you know. Bitcoin is the original cryptocurrency so far. I mean, blockchain technology actually dates back to the 1990s, but like I said, I'm not going to go too far into that. Bitcoin is the leading cryptocurrency at the time that this was recorded, and I'm pretty sure it will be for the rest of time, right? So it was founded by Satoshi Nakamoto, which is an alias for a man that we don't know. He dropped off the face of the earth early in Bitcoin's history and is waiting probably to cash out on us. But he developed something beautiful and introduced it very modestly, simply as I'm working on a peer-to-peer payment system, something like that. I can't remember what it was, paraphrase, but he was very modest about it. And the last thing he said before he left was, maybe instead of trying to figure out who I am, you should worry about the project and the purpose it serves. So Bitcoin is a beautiful project in my opinion, and that's a little bit about the backstory of Bitcoin. So it can be broken down into smaller segments, which is known as Satoshi or sats. People call them sats for short. And you can trade Bitcoin against almost every other digital currency on the market. Bitcoin is good to have in general, right? You want Bitcoin, please buy some Bitcoin. Not financial advice, but buy some Bitcoin. In the long term, the value of Bitcoin could easily surpass the value of 100,000 per Bitcoin. Like, I swear to you, I've been doing this for a long time. You're barely hearing about me because I'm barely making a name. This is a script that I wrote a long time ago, and I wrote that Bitcoin could surpass the value of 100,000 per Bitcoin. And we're cresting 60,000 right now, so I'm probably going to have to expand that. I mean, I think Bitcoin's going to go to $1 million a Bitcoin one day, but that's a tangent. So if you want to be a successful crypto trader, you must treat crypto like any other business. And in any other business, how do you make money? You make money by buying something and selling it at a higher price. For example, if you own a restaurant, then you're buying ingredients and people's time to cook the meals. And then you sell those meals at a higher price on the menu. And that's how you make money. It's no different in crypto trading business, right? The only difference is that you're not buying and selling physical products or anyone's time. Instead, you're buying and selling digital currencies, right? So it's one of the best businesses you can get into for a few reasons, right? So first, it requires a minimal investment. If you wanted to open a restaurant or store, it would take you tens, if not hundreds of thousands of dollars, but you can start trading crypto with literally, as little as $50. Are you going to see a lot of gains with $50? No. But can you start? Yes. Can you start training and start learning with $50? Yes, you can. You can get started with a very small amount, and a lot of people don't understand that. They think that, oh, Bitcoin costs $60,000. I'll never be able to afford one. Not if you don't start buying now. So you can literally start with any amount. I would recommend, at least $1,000 or $2,000 maybe if you want to see some ample returns. But, you can start with $50 and practice making percentages to acquire more money. So moving forward, oh, let me just note that the minimum balance to trade on most exchanges is $10, so keep that in mind. Second, as a crypto trader, you are your own boss, right? It means you don't have to work 8 to 12-hour shifts for somebody else. Even as a beginner, you don't need more than like 3 to 6 hours a day to study and learn. I mean, that might sound like a lot now on top of the responsibilities you do have, working 8 to 12 hours and then trying to study crypto for another 3 hours. 15-hour workday, and you're probably going to be tired. But if you take the time to invest in yourself and learn about cryptocurrency and how to trade it, I promise you, you will be profitable. You will be able to quit your job. You will be able to be your own boss. Crypto is giving us the power to free ourselves, right? And be financially free, okay? So If you aren't trading full time, like I said, 2-3 hours a day is more than enough to generate a decent income. And then once you have the skills required, you can start to, put more money into your trades and ultimately quit your job and spend more time in the markets. So third, there's no other cost to your business. There's no employees, no rental, no inventory. So you don't have to pay anyone. There's like no upkeep. I mean, you're going to have to, like I said, if you use 3 commas like I do, there's a subscription fee. If you use TradingView to do your technical analysis, there's a subscription fee. But I mean, these are the tools of the trade. Any job you go to, if you want to be a welder and make $60 an hour, you're gonna have to buy a $60,000 truck and a $3,000 rig. But if you want to make $60 an hour trading crypto, you just need Wi-Fi and $12 a month to TradingView and $65 a month to 3 commas. Not that big a deal, in my opinion. But like I said, moving forward, the trading is a recession-proof job, right? The COVID crash just happened, guys. We saw Bitcoin slam 50% in a day. But what happened? Bitcoin is up, I don't know exactly how much, definitely over like 200, 300%. Like I said, I don't know how much, but it slammed from like 3,000 to, what is it now, over 60,000? Yeah, so to 30,000, that would be 100%, and then the 60,000, that's 200%. So that's just rough math off the top of my head, right? So crypto trading is recession-proof. It doesn't matter if it's a bull market or a bear market. You can make money in both directions. If it's a bull market, you take a long position. If it is a bear market, you take a short position. You can make money either way, no matter what is happening in the market. So it's absolutely beautiful. If a currency's going up, like I said, you go long, and if it's going down, then short. Now, one of the last things that I want to note about crypto is that it's location neutral. You don't have to wake up and travel. Some people, I live in Texas. I live in USA, and Texas roads are long as hell, bro. I know a lot of people that drive 45 minutes an hour a day to work, and then they have to drive 45 minutes back. Don't know what it's like for you to drive through your city traffic or over the country market roads, but you can eliminate gas fees for traveling to and from work. You don't have to go anywhere to show up to work. You have your office on your phone or on your laptop or on your iPad. So location neutral income, it's wonderful. So being successful in crypto trading, like I said, is very much being successful in business. You need to work hard and master the skills required, right? So people ask me all the time, is it easy? And the answer is no, it's not. It's like asking if starting a business is easy or if maintaining good health is easy. It's like, no, it's not. Of course it's not, because if it was, then everyone would be a multimillionaire and everyone would be Abercrombie model, right? I hope I don't get sued by Abercrombie for saying that. I might delete that in my YouTube video. But if it was easy, then everyone would just stay at home, like I said, and press a button to make trades and reap the easy profits, right? But it's not that easy. Once you understand it, it becomes easier, right? But this is a business. It's not an easy way out like so many fake fucking traders and gurus make it out to be, okay? This is not a get-rich-quick scheme. You will not get rich overnight trading crypto, but you will get rich. I promise, if you stick to it and devote yourself to it, right? You don't have to become a maniac. I'm just saying, replace your job. Make this your job, right? People I talk to, they're like, oh, dude, I'm not a crypto maniac like you, right? I have a job. I have a family. Dude, this is a job. I'm trying to give you a new job so that you can spend more time with your family and your loved ones, right? So please take time to learn, because a lot of people will advertise and try to sell you some fake stuff on the internet. There's too many con men. I myself was conned a couple times in my early journeys. That's why I have literally devoted my life to educating others about cryptocurrency. This will not be the last you hear from me. If you suddenly stop hearing from me, it is because I passed away in a terrible accident. Otherwise, I will continue to live each day to try to spread cryptocurrency education and empower everyone to take their financial situation back into their hands. So, to become successful at crypto trading, like I said, you must master the skills and learn the required knowledge. Anyone can start trading crypto with no knowledge and make 50% return on their first trade, but that's just luck. Because for every fool that went out and made 50% return on their first trade, you know, there's another guy who lost a lot on their first investment. They could have lost 50%, right? Because we all know DeFi. If you've been there before, then you jumped into something that dumped and lost 99% in the blink of an eye. Happened to me before. So, you know, trading like that is just gambling. You got to know what you're doing. It's not just about making money. It's about how to make money consistently and to make sure you don't lose this money that you have gained. So the good news is that learning a skill like crypto trading is infinitely faster and infinitely easier than learning how to grow your own business or getting a degree and then finding a good job that you're qualified for. So luckily for you, like I said, I'm going to teach you pretty much the basics to become a successful cryptocurrency trader. And we have, like I said, really in-depth coverage on this on our website, and you're more than welcome to go check it out. Purchase a course from us. We just completed our bot functions course. Throughout this entire process, I'm not going to tell you anything about bots. That is some pretty advanced stuff. Not really, but you know, we're going to be telling you how to learn about crypto trading. So, understanding how crypto trading works, right? It's not very hard. It's actually pretty easy. So you basically have a 50-50 chance of being right or wrong. So it's not like, you know, it's hard to earn crazy profits by trading blindly, but it also isn't hard to make crazy losses at the same time. So the challenging part is making money consistently. In the crypto market, like I said, first you can go long by buying low and selling high, and then you can go short by selling high and rebuying low. And we're going to talk about that a little bit different, or a little bit more in detail here a little bit later. So first we're going to discuss opening market times. So I'm going to be talking about them in my time zones, guys, and just know that the opening market times kind of affect the crypto market, because this is when, you know, this is when people around the world start waking up and they check their accounts, and you know, soon in the future, this is where a lot of institutional money is going to become more active. And you see that a lot in the Forex market when markets open and close. It affects the liquidity and the trading volume within whatever pair you're observing. So remember that the crypto market's open 24 hours a day, 7 days a week, so you can trade any pair at any time. But however, there are times when trading is more active, such as big bank market opens and market close times, like I said. And this is where you're bound to find more volatile moves for you to profit from during those active hours closer to opening and closing times, right? Because we open, we do work, we take lunch, we become inactive, and then before work ends, we become more active. So that happens all over the world, every day, 24 hours a day. Someone is waking up and someone's going to sleep. So even though the crypto market's open 24/7, like I said, you can find different pumps in volume at different times based on the open and close times. So these are going to be based off of New York time, actually, and I'm going to start with Sydney. So for me, the Australian market from Sydney opens at 5 a.m., closes at 2 a.m. So the Tokyo market opens at 8 p.m. and closes at 5 a.m. The London market opens at 3 a.m. and closes at 11 p.m. And the New York market, of course, opens at 8 a.m. and closes at 5 p.m. And these are all in my time zone. These are actually in EST time zones. So that's where the New York market is based. And now we're going to talk about the different types of crypto traders. So one concept that you must understand is that there are many different ways and styles of trading, and each person has their own style, right? No matter what I tell you, you got to take and develop your own style. So there's basically 4 main categories that we can divide traders into. That's going to be scalpers, day traders, swing traders, and position traders, right? And the main differences between these traders are how much percentage they are targeting in their positions, the duration of their trades, and the time frames they use on their charts. So all the strategies we'll be discussing here are going to be day trading strategies. You can take and adapt them to, you know, fit your own agenda. But basically we have scalp traders, which they are scalping the market and they want to take very small profits in a short amount of time. So they're actually trading seconds to minutes, and they're only looking for 0.05 to 0.25% profits, and they're happy with that, right? So they're only looking at usually the 1 minute or 5 minute time frame. Then we have day traders. That's what you want to be. That's what I am, right? I take some scalp positions, but I'm a day trader, and that's what we're going to try to make you by the end of this. So as day traders, we look for, 0.5% to 4%. We want to be in and out within a day, right? I don't want to go to sleep and leave my trade open if I don't have to. If I could close for a profit, I'd rather do that. So we usually look at the 15-minute, the 1 hour, and the 4 hour time frames, but I actually use the top-down analysis approach, and we'll talk about multiple time frame analysis later. So you want to observe the 4 hour time frame to identify the bigger trend, then use the 1 hour time frame to plan your trade, and then the 15-minute time frame to kind of fine-tune your entry and projected exit. So swing traders, they look for a little bit more. They try to get 5 to 10% out of a position, and they're okay with staying in a position for a few days or weeks. If it's going to be profitable for them, swing trading is a little bit easier because you don't have to do such hardcore technical analysis. You can take a position over a couple other for a few days, and be safer about it because it's easier to do. It's easier to observe anything on the large time frame rather than the smaller time frame. So they try to observe the 1 hour, the 4 hour, and the 1 day time frame. And of course, they might look into the weekly to try to map their weekly time frames, but that's what a swing trader looks for. And then a position trader looks to achieve 10 to 20% on their trade, and they usually try to achieve that within weeks to months. So they're completely okay with taking positions for months at a time, right? These are long-term investors, like MicroStrategy. That everyone knows Michael Saylor by now. If you don't, he's pretty hard on buying all the Bitcoin, so you can't have any. And then we have, so position traders look at the monthly time frames and the weekly time frames. Sometimes they'll check the daily to, maybe make their entries, but usually they're looking at the larger picture, and they're throwing down big chunks of cash because they're not comfortable with, me, I can day trade $1,000 a day and feel all right with it, but this position trader, he might have $100,000 and he doesn't want to day trade that because that's pretty risky. So they'll take a position trade. Moving forward, we're going to talk about currency pairs. So if you know nothing about crypto, first, you need to understand that currency pairs behave differently from stocks or other financial assets, where you could say like the price of Tesla is $420 per share. You can't simply ask for the price of Bitcoin because Bitcoin translates to a lot of different markets. So you have to ask, generally a lot of people say, oh yeah, Bitcoin broke 50,000 or 60,000, and we know we're talking about USD, but really, Bitcoin goes against a lot of other currencies. It has its own market, so it can be compared to, fiat currencies. It can be compared to other cryptocurrencies. So you really need to mention what pair you're talking about. And currencies are always exchanged for one of another. So there's a Bitcoin market, like I said, where everything is measured in Satoshi. And there are other markets like US Dollar Tether, BUSD, which are like stable coins. There's an Ethereum market as well that you can trade to make more Ethereum. So, within those markets, there's a wide selection of currency pairs to choose from. So many options to choose from, so many ways to make money. And the most common pairs by volume, of course, are going to be Bitcoin USD and Ethereum USD. And those are absolutely the most traded pairs. Doesn't matter what anyone says. A lot of Bitcoin maximalists will try to keep you away from Ethereum and just try to make you say Bitcoin. Yes, Bitcoin's the best store of value over space and time, but there's plenty of money to be made in other pairs. So don't be fooled. So the most successful traders tend to only trade a few pairs, which they know very well, which they can, predict price movements better. That way they can map them and predict volatility movements, predict their spreads, and things like that. So we'll talk a little bit more about this later. Once you become more confident in your trading ability and you begin to make trades in many pairs, like a lot of people that I see in the beginning, they get it wrong. They want to start off like chasing pumps and what's going to pump today, or what coin are we after today? Like, you should be after Bitcoin every day. You should 100% focus on Bitcoin every day. Get in and out and take as much Satoshi away from the market as you can, and as much US dollar away from the market as you can, or your native currency, wherever you're from, and just stick to that pair. Learn that pair very well before you try to go out and learn anything about any other pairs. Then you can start to add more pairs to your watch list and observe their price movements, because really, you shouldn't be investing into anything you don't know about. And that's just fact. That's cold hard facts. You might not like it, but that's cold hard facts. Quit trying to chase pump and dumps. Quit hurting yourself. Learn how to do technical analysis. So just pick one pair to learn about for now, and it should be Bitcoin, right? That being said, all my favorite pairs to trade, and this is not financial advice, I like to trade Bitcoin USD, Litecoin USD, Ethereum USD, Link USD, and Theta USD, right? So I try to trade those every day. If I don't see an opportunity in one, I'll move to the next to try to increase both my USD holdings and those coin holdings, because I want to make more of both moving forward into the future. So I have found certain patterns within these pairs that are repeatable and therefore easy to manipulate to make profits more consistently. I also believe in these cryptocurrency projects for the long term and try to increase my overall holdings in these crypto coins on a regular basis. So we're going to talk about cryptocurrency exchange rates. Hello everyone who's joining. If you don't mind sharing to your friends, that'd be neat. That way we can teach them about cryptocurrency. When trading a pair such as Bitcoin USDT, the first currency that is listed is Bitcoin in this case, is known as the base currency. The second currency listed, USDT in this case, is known as the quote currency. So the base currency always has a value of 1, and the quote currency shows how much one of the base currency is worth. So in the quote currency, if BTC USDT is worth $9,432, then that means the value of one Bitcoin is $9,432. And you must pay $9,432 to buy one Bitcoin. I wish that was the case. In the USDT market, the values of different coins are relative to the US dollar tether, and changes in price are measured into decimal places. So in the currency pair BTC USDT, like I said, BTC is the base currency. This is what you'll be exchanging your USDT for. That's what you'll be buying when you look to start a trade. And your USDT is the quote currency. So that's what you're holding when you are looking to start a trade, and it's what you're looking to receive profits in. If you buy one Bitcoin, you'll have to pay $9,432. If you want to sell one Bitcoin, you'll receive $9,432. So if you want to profit by going long, you can take a long position on BTC USD when you believe Bitcoin is going up and the US dollar is going down. So you're bullish on Bitcoin and bearish on the dollar. So example, we purchased one Bitcoin at 10,000, expecting the price will go up. We're right. We sold that Bitcoin for 10,100. Okay, so I think I messed that up. We purchased one Bitcoin at 10,000, expecting the price to go up, and we're right. And then we sell the Bitcoin for 10,100 later that day. So we made $100 profit, which was 1% price change from the buy price or the entry price to the exit time, or the time we sold the coin. So profit by going short, in a BTC USD example, we believe Bitcoin is going down and the US dollar is going up. So we are bearish on Bitcoin and bullish on the US dollar. Example, we sell one Bitcoin at $10,000 expecting price to go down, and we are right. So price goes down and to 9,900, and we buy one Bitcoin back. So now we have one Bitcoin and $100 laying around. So the profit is the $100 that you now have your one Bitcoin back, and you spent less money on it. So now you can take that $100 to another position, right? And that's how you short. So lastly, if you made it this far, looks like there's not that many viewers here, but I do thank everyone who joined in. We're going to be talking about leverage. So just briefly, we're going to talk about leverage in lesson 1. One of the most important concepts could possibly be leverage. A lot of times I tell my students I don't trade leverage, and that's mostly true. I usually don't trade leverage. Right now there's a Binance Futures competition, so I am leverage trading right now, but normally I don't like to expose myself with leverage. But if you don't have a lot of capital, you might want to look into using leverage, because it can amplify your gains. It can also amplify your losses, which is why you need to know how to use it properly, and that's why we're going to discuss it right now. So most crypto brokers allow a lot of leverage on crypto coins, and Binance offers up to 125x on Bitcoin. We're going to talk about 100x for simple math's sake. So if you had 100x leverage and you had $1,000 in your account, that actually means that with 100 times leverage, you can trade with $100,000, right? Because 1,000 times 100 is 100,000. So if you put 100x leverage on your $1,000, you can take as if you had a position size with 100,000, even though you actually don't own that money. So the catch is, you will take profits on that if you are profitable, but you will lose profits on that if you are not profitable. So that means you will be trading as if you had $100,000, and if you made your 1% profit on that, you would take your profit. But if you made a 1% loss on that, it would actually be 100% loss because you have leverage applied, 100 times leverage. So you just liquidated you just liquidated your position. So you need to make sure that you are trading carefully whenever you apply leverage and that you don't overexpose yourself. So if you noticed earlier when I did the math on the going long example, buying a whole Bitcoin at 10,000 gave us a return of only 100 when we made 1%. So that's not a lot to earn a lot of money if you don't have a lot of capital, right? That means you're going to need a lot of capital to make a lot of money if you want to be successful, if you want to be a pro trader. So it's not a lot for, like I said, a lot of us. So that's where you might want to use leverage, because if you had an account of $1,000 and you made 1% a day, I mean, you're going to be making money, but it's going to be about 10% per trade. If you can make 1% a day, that's great. But at $1,000, your compound rate is going to take you quite a bit of time to get to where you can sustain yourself comfortably. So that's where leverage comes in, if you learn how to trade leverage properly, right? But because movements in crypto are so volatile, you could very well make a killing without leverage, right? However, you can also very easily advance your earnings by using leverage successfully. So putting $1,000 to make $10 may not seem like it's worth your time, but it's the percentage gains you must focus on. Because like I said, once you're consistently making 1% on each trade, if you employ leverage, you could be making, about 10% on each trade or more. I have students of mine who are making 30 to 40% per trade. I have a couple students who have made over 1,000% per trade. It's insane, if you do it the right way. So sometimes a cryptocurrency pair will move 15% in a day, and you can make amazing profits without leverage, right? In the example I provided earlier, without leverage, you'd have to invest $1,000 to earn $10, which is a 1% return. So that's pretty minimal return for such an investment, like I said, which is why some crypto traders use leverage. So now, that being said, whenever I do use leverage, I personally never use more than 1 to 20, so I never use more than 20x leverage. So that means if I put $10,000 into my account, I can trade with up to $200,000 if I'm using leverage. That being said, I would consider myself a pro trader, as I live off my investments and I use my crypto trading income to support my lifestyle habits. And so I'm a little bit more comfortable with using leverage when I want to. I would recommend that you maybe start using smaller amounts of leverage, like 3 to 5 times leverage, if you want to start this journey. If you want to start trading futures, maybe even 2x leverage. No need to do anything crazy right off the rip. So that means, if you had $10,000 to put in and you had 2x leverage, you could trade with $20,000, which is plenty of money. So don't go shooting yourself in the foot and overexposing yourself. If you would have employed the leverage of times 20 on the going long example provided earlier, you would have needed to invest a margin of only 500 to trade as if you had that 10,000. So your return of $100 from your investment of 500 is now equal to 20% instead of the 1%. So if you make 1% using 20 times leverage, your return on investment is 20%. If you lose 1% using 20 times leverage, your return on investment is negative 20%. Okay? So I want to make sure you get that straight. Using the same example as a reference, if you had $10,000 into the entry, and that was your actual capital, and you had used 20x leverage, right, then you could have made that trade as if you had $200,000. And making 1% on that means you would have made a much higher return than the measly $100 that you did, right? So if you used times 20 leverage, you could actually times 20 that profit and make it $2,000 because you have used 20x leverage. You would have made $100 without leverage, but if you used 20x leverage, you would have actually made $2,000 on that trade. So, on the flip side of that, if you would have lost 1%, means you would have lost $2,000 out of your $10,000 capital. So you could have lost as easily as you could have gained. That's why when you're using futures, you need to make sure your technical analysis is very accurate. And again, we're going to be talking about technical analysis in lesson 3, and we're going to be producing this for you over a couple weeks time. If I were to talk about everything that I wanted to, brush off on you, I would be here for hours, and that's just not ideal. So I'm going to give everyone a chance to hear about this. That way they can go check it out on my YouTube, because I'm going to upload this to my YouTube. It's also going to be uploaded to my Instagram TV, IGTV. So that way you guys can go and look back on anything you might have missed. For those of you who are just joining, we are going to be covering how to trade cryptocurrency in finite detail. And that way you can be a professional cryptocurrency trader by the time we're done with this. So that's all for this one, guys. Remember a couple things I said. Don't get greedy with your leverage. 3 to 5x leverage is really is a lot. And if you don't know how to use it, don't hurt yourself. Take into consideration the opening and closing market times, and see maybe you can plan your trades around then, because you can expect volatility in some of those positions. And get yourself some Bitcoin. Go get yourself some Bitcoin if you don't have any yet, and if you do, congratulations, you're going to be part of the elite. Now remember, don't take any of this as financial advice. You need to do your own research. I hope you guys learned something from this today, and if you did, give it a heart, give it a like, share it with your friends, tell your boys what's up. Let's get everybody on this money train, bro. Join up on the money gang, guys. Let's do this. Let's pump some Bitcoin, all right? I hope y'all had a good time today. And I'll see y'all next time. I don't know when the next lesson will be just yet, but I will be posting to my Instagram, so stay tuned. Don't miss out, guys. Please give me a follow, and like I said, share with your friends and family so we can get everyone on this Bitcoin game before it's too late, before all the Bitcoins mined up. All right, guys. I'm gonna check y'all out now. Toodles. Thanks for watching, everyone.